Well, ladies and gentlemen, it's a pleasure to have with me this morning Mr. Peter McGuire, the CEO of AustralianXM.com. We also joined today with a special guest by Mr. Farah of the NG Farah. Now, I just want to say before we get in, it's usually, Pete, we have a one-on-one here. We talk global markets, but we will be talking a little bit today about a subject that's probably close to all of our hearts, and that is property here on the eastern seaboard, specifically the eastern beaches here in Australia. But welcome, gentlemen. It's the first time we've had a panel on the show, and Pete, thanks for making it happen.
You're welcome, Will, and it's good to also get an appreciation as far as we've seen asset prices, and we deal in very fast markets that are open 24 hours a day, 5 days a week, and big price swings. We've got someone with expertise, a lifelong experience being Glenn's role, and the opportunity to examine quickly the time phases of property markets and residential property as an example.
You led with a little bit of a fast-paced scenario. I assume you're suggesting to me that XM's got a significantly greater volatility than the Australian property market.
Well, when we saw on Friday, Will, crude oil prices falling 13%, then that really gave us, I think, a wake-up call, and there was a great degree of trepidation over the weekend. How is New York going to face Monday? Well, the markets they've boomed to the upside. NASDAQ was up very, very strongly, S&P 500 and the Dow, all in very positive territory, and that sentiment seems to have waned significantly. We've had a very nice push to the upside as far as crude oil prices also. So that variant that was released on Friday, the South African one, it doesn't seem to have had a great amount of impact now looking on Tuesday morning in Sydney.
Well, as we know, we talk about volatility, we talk about growth, we look for competitive advantages and the signals that drive market behaviour.
Yeah, very much so, Will. So it just seems to be, onward and upward, green lights, green shoots. And from where we're looking now, it seems we've put that behind us, and moving forward, it could be a nice week ahead as far as opportunity, volatility on the market, US dollar index all over the shop, and currency trading, a big highlight of our week.
Now, Pete, we have Glenn Farah here, and he is, as you say, a man worth talking to when thinking and talking about property here in certainly the eastern seaboard and the eastern beaches here in Sydney. Under the hammer, Super Saturday pricing, market price volatility. I don't think we've ever seen a period with more sales in over the course of a 12-month period in this part of the world, Glenn.
We haven't. Good morning, Will. Good morning, Pete. Great to be with you today. It's a very, very heated market at the moment. I've been in the game for 42 years, and I can't remember a surge in prices like we've had in the past 12 months. There's an increase in turnover. There's a lot of people wanting to participate in the market, and as a result of that, prices have gone to a new level right across the eastern beaches, but more particularly right across Australia. But we're focusing on the eastern beaches. That's the focal point. And the surge we couldn't have predicted this surge because we thought we were coming off a bit of a high point, 2017, 2018. But as soon as COVID hit, Australians couldn't travel. They couldn't spend money the way we are spending it. They decided to really focus on their own homes, their households, and combined with a very, very low interest rate, probably the lowest in our history, we've seen prices continue to rise at a level that most agents haven't experienced before. I haven't experienced it in my time.
Well, what we're talking about here is the property as an asset class. I mean, it's very different to the trading that we see on XM. XM's all about the interest rate. It's all about the movement. It's all about the inflation. Are we seeing pockets here of, if you like, hypergrowth that perhaps aren't being seen in other parts of the country? And will it continue?
Well, Will, that's always the $64 question. I'll pass it over to Glenn for his views, but the point that we've got to be very conscious of is record low interest rates, as Glenn referenced, but that's a global phenomenon. So we're very conscious where we've got even negative interest rates in the likes of Japan or Switzerland, where we give you give the bank $100 and you get 99.8 back. So that really demonstrates where we are as far as a global interest rate mindset.
you're going to see a lot of expats coming back home, tens of thousands of them over the next 2 to 3 months, that they want to buy property, and they want to buy property in the best part of Sydney. And a lot of people consider the Eastern Beaches the best part. Then you've got a business migration scheme that just focuses on people who have got high wealth individuals who are coming into the country, and that's the first thing they do is they want to buy a home. So that's going to put added pressure on the property market, especially in these eastern coastal areas. The areas that we're focusing on is Bronte, Coogee, Randwick, and I can't see any pressure coming off that Bronte, Coogee, Randwick market. For those areas, I think in 2022, you'll see, as the banks have predicted, probably an increase of around 10%, and could be more depending on the amount of properties for sale. If people decide to hang on and the volume's not there, you'll see an upside.
Glenn, I'm going to throw a couple of charts up on screen and we'll briefly touch on them. The first chart we will see shortly is the median sales price versus the number of houses sold in Bronte. So on screen now, you'll see that the left-hand side of the screen there is your pricing, and on the right-hand side is the number of properties sold. And we've got an increasing, if you like, chart here that does suggest that in August 21, we sold 50 properties there, an average price of just over 4.8. Does that tally with you, Glenn?
Yeah, it does. We've never seen so much turnover in the Bronte area. It's normally a tightly held market. As a result, and these price points, that whilst that median price point of just under 5 million is very evident, but I've seen properties in Bronte selling for 10, 15 and $20 million. So there is no upper level to the market in Bronte. It really is getting out of bounds. It's getting out of control. But the volume is there, which is positive for people who are looking to buy, because buyers want choice. So there is a little bit more choice. It's still a relatively small suburb, so that is also putting pressure on prices because there's only a limited amount of stock available at any one point in time.
Glenn, let's take a quick look at Coogee. Similar sort of story. We've got an outperformance here. Again, we're looking at the price on the left and the number of properties sold on the right. 60 properties, just over 3.5 million, or just under 3.5 million, really. That's significant.
It's significant. It is. And if you look back in the history books, even between 2015 and 2019, we didn't have that sort of volume each year, calendar year on calendar year. So an increase in volume, an increase in price point, it's all coming down to a lot of confidence in the marketplace, and a desire for lifestyle properties. When you're talking about lifestyle, people really, they get caught up. They're not really thinking about, well, I've got a budget. They're thinking about their lifestyle. They want to be within a walking distance to the beach. They want to be en route to the city. They want to be looking, if you've got an ocean view, that sort of encapsulates that lifestyle. So they're factors that you can't really quantify and put a price point on. And when these properties are going to auction is the preferred method of sale in these areas. We're seeing properties going, in some cases, $1, $2 and $3 million over the reserve price, which is really, it's great for the vendor who's selling the property, but buyers are becoming disillusioned because of that increase in price. And all of a sudden, there are new precedents created all the time. And the auction process is the only process that will really determine the market value in a rising market. Vendors have to go to auction, otherwise they will literally be costing themselves a lot of money.
And look, final suburb to take a quick look at today for comparison, Randwick, slightly back from the beach, but just as busy, just as aggressive in terms of the selling. The numbers here on the numbers of properties sold are much higher, closing up on closer to 150. Average price sort of sitting there at 2.8 to 3. Huge volumes of properties sold there.
Well, Randwick is a city in itself. There is no doubt it's got more infrastructure than I think any other suburb in Sydney. It's got a race course, it's Centennial Park, it's got the hospital, it's got the University of New South Wales, just to name a few. It's adjoining Coogee, and from a lot of from a lot of places in Randwick, you can see the ocean. Centennial Park is a massive draw card for buyers. It's nearly as popular as being close by to the beach. So when you've got that infrastructure in Randwick and they're spending, I think it's about $50 to $100 million expanding the Prince of Wales Hospital. It's going to create 3,000 extra jobs in Randwick. Randwick is a suburb that will continue to grow. People want to live there for convenience. They've recently completed the South East Rail network that goes through Randwick, goes straight into the city. Another reason for convenience, getting into the city. If you work in the city and you live in Randwick, you literally jump on the light rail, you're in the city in 10 to 15 minutes. As in Coogee, you can get in the market in Randwick. You can buy a 2-bedroom unit in Randwick for anywhere between $800 and $1 million. But also we've seen properties in Randwick close to Centennial Park selling. We sold one recently for just under $7 million, $10 million. So like the coastal suburbs, big surge in those freestanding homes on decent blocks of land, close to the park, en route to transport, close to infrastructure.
Well, guys, I think we've plenty to talk about, and we can certainly spend more time talking about property. I think it's every Australian's favourite subject. Pete, if you want to give me a fast minute on terms of global market and impacts as we see out the week from an XM perspective, take me through it.
Keep a very close eye as far as crude oil, Will, because we've had that bounce. So we've got OPEC talks. We've got that extra 400,000 barrels that need to be either they're going to push the button on that. Secondly, and that'll be thought through this week from OPEC. Secondly, we need to our major concern is US dollar index, very, very volatile. So that currency trade perspective and naturally interest rates, as Glenn highlighted, the interest rate story, what's moving there? We've got very, very high inflation in the Eurozone. So what's the Eurozone going to do as far as naturally raising rates, or are they going to sit on their hands for longer and possibly over to, mid 22? So those are all the concerns. And don't forget the Santa Claus rally. So if we continue to see that uptick, which is everyone's saying is nearly baked in, Santa Claus is here, then that continuing confidence and sentiment, it's going to raise equity markets. And naturally the flow on from that will be a business like Glenn's, people looking for new homes and so on from that sentiment, positive confidence level that looks like it's washing across the market into 2022.
Rightio. Well, that's a wrap there, guys. So thank you, gentlemen. It's been fun.
Thanks, Will. Thanks, Pete.